The Pro Show is brought to you by Rockin' Media and our proprietary Flash HDR photo process, providing you with the best, most realistic photos of your property. See the difference at rockinmedia.com. Hi, and welcome to The Pro Show. I'm Rick Machle. On today's show, we are talking all about mortgages. It's not normally done this way. Nancy Alexander, who's been on every show we've done, is back, but we also have another mortgage professional, and we're going to get into it because this is a big topic that's critical to saving you lots of money when you are out getting a mortgage. If you don't do it right, it could either be the difference between getting a home, not closing on time, paying too much for that mortgage. So that's what we're going to get into today. That's all next on The Pro Show. As promised, we have a great show for you today with two mortgage professionals who work together all the time but are in totally different states, one of whom looks very familiar to you, I'm sure, if you've seen The Pro Show, and that's Nancy Alexander. And Nancy is here in Colorado. Hi, Nancy.
Hi, Rick.
How are you?
I'm good, sir. Yourself?
I'm doing good. So, and then the other person on the podcast today is Kristen Boano, and she is in California. Hi, Kristen.
Hello.
Great to have you on. Thanks for being on the program. And we're going to have a lot of fun and get people really educated, which is the whole goal of the Pro Show on mortgages, and at least give them a really good basis today. But before we do that, although you've seen Nancy on a lot of the programs, I want to find out a little bit more about how long she's been doing this. Where, is she from here? Where's she from? So we'll start out with Nancy and then we'll come back to Kristen. So,
story time, Rick. I love it. I am one of the rare birds that I am a native to Colorado. And so, born and raised, as they say, started my business career in being an entrepreneur. I opened up my first business when I was 20, opened up a second one when I was 23, sold them by the time I was 28, did some marketing for a national company for a couple of years, put myself back in school, got my finance degree, and I've been writing mortgages ever since. So it's a short story, and that's been I think I'm in my 30th year of writing mortgages.
I was going to say, so that was like 5 years ago? No, it's been 30 years now. Hi.
I love you. I do.
And so, Kristen, you're in California. What part of California?
I'm in Southern California in Murrieta, about an hour north of San Diego.
Okay. But you're south of where all the fires were by quite a bit.
Yes, we are. We've survived all of that. And yeah, we're happy to look forward to some nice spring weather.
And you bring to the table kind of two different careers too. You're also a real estate agent, correct?
Yes, actually, I'm a real estate broker.
Okay.
And yes, mortgage has really been my second career.
Okay.
I started, 5 years ago, wearing both hats as a broker, having dual license capabilities in California, and it has been a wonderful, wonderful service, really, for the customer and for the borrowers.
And you are with KB Lending Real Estate and KB Real Estate and Lending, right?
Yeah, so that's my own company.
Okay.
Like I said, I've been in real estate for over 30 years. Originally from Honolulu and landed in Southern California.
Okay.
And first jobs were, accounting and marketing and all this stuff, and thought, well, let's just give it a try. Let's try this real estate thing. So survived worked in the builder world, ran sales companies for major, publicly held companies, and was never the salesperson to say, hey, isn't this kitchen gorgeous? Or, hey, isn't this view pretty? We always sold payment.
Yeah.
We always sold payment. And, 30 years ago, we all wanted to make sure everyone could qualify for $2,000 a month. And, obviously that's changed a little.
Yeah.
So yeah, fast forward and, COVID hit and thought, it's time to try something new. So I've been in mortgage both last 5 years.
So you're one of those people that will do anything to keep in the 70-degree range year round,
Pretty much.
Pretty much.
Yep.
Hawaii and Southern and San Diego. So
exactly.
two beautiful places to live, and you've got it made there, but you'll never see a snowflake. Well, it's great having you on this week. And so let's get right into it. So one of the decisions you have to make is who's going to handle your loan. And I really want to have a deep discussion into this because I think it's critical for a lot of different reasons. But there's lots of places you can get your loan, a bank, a mortgage broker, I don't know, your sister-in-law, whatever, if she's a broker, or brother-in-law. And but what are some of the things you need to look for? And we'll start out with Kristen on this one.
It's a great question. As I mentioned, I am not a big, what is my rate, Kristen?
Okay.
I am a big, what is your play, customer? What's your play? Is this your first home? Is this your second home? Is it your third home? Is it an investment home? Is it my forever home? Whatever that is. And then I just say, we talk about what's going to make the most sense to you. That's why I'm a firm believer in the broker channel, because your big box banks, the online people, you won't have the interpersonal response that you'll have with individual mortgage broker. So I always want to dive into it. Yes, rate is important. Don't get me wrong. We eventually will talk about rate, but my answer is today, more than 4% and less than 10. Because I don't know what your situation is. So let's have a conversation and let me help you try to achieve those goals. Right, Nancy?
I couldn't agree more, Kristen. I think that, I've always said when I look at you, at a real estate agent, because you're so special that you do wear both hats, that it's like you can go banker, you can go broker, and you could go correspondent lender. Right. And we sit in the broker channel for a very specific reason. And it is for that, whether that's rate, fees, the combination of, because that's what we have to take into consideration. The bank sells the bank's product. The broker sells several products. And the correspondent lender is typically just sitting in first lien position. So they're selling those products that sit in first lien position. So I agree with you. Our platform as a broker gives you this foundational piece that really takes you from your normal loans, your conventional, your FHA, VA, USDA, your government products, to your jumbo products, etc., to bank statement loans, to DSCR, which are investment property loans, to one day out of foreclosure, to home equity lines of credit, which are second mortgage products. I mean, all of this stuff that we'll talk about. So the broker channel, to me, is no question the channel in today's market to be in.
Right. I always like the analogy of, who doesn't love ice cream, right? Who doesn't love ice cream? And traditionally, globally, your banks, your credit unions, your mom and pop, local, little down the street lenders, they're vanilla. And if you love vanilla, go there. But most people are rainbow sherbet. With the broker channel, we can,
I love it.
We're able to, satisfy that rainbow sherbet flavor, not just vanilla. Not that there's anything wrong with vanilla. However, everyone's so unique, especially today. You've got, so many different factors that play into it that I think it's really important that we have that ability to really speak to every single customer that we come in contact with.
Agreed. It's the platform is wider, it's broader, it's deeper than the other two competitors as far as the bank, i.e. the Wells Fargo, the Bank of America, the Chase, the whatever you want to call it, versus the correspondent lender, the Fairway, the Guild, the et cetera, et cetera.
Right.
And again, we don't have the layers that these other two entities do have as the broker. You can really come in, you were talking about rate for a minute, and you can really come in on some raw rate, which you can't in the other two realms or the other two worlds. So yeah, I think, Rick, to answer your question, I think it's super important. I think as to who you decide to do business with and what they're able to offer you. And I think the broker channel wins out every time on that.
Because you have more products? Is that an options, more solutions?
Absolutely.
Absolutely. Hence the rainbow sherbet.
Okay.
Because as well as I do, I'm sorry, I love food, y'all. Come on.
Yeah.
I know you probably eat ice cream in Colorado, Nancy, but come on.
I do, even when it's snowing, Kristen.
Right.
You know, it's the best time to go to the ice cream store because nobody's there.
That's right. So with that being said, Rick, you have these options. You you can go as low as, we'll talk about credit score at some point, but 580 up, as low as 580. Whereas a lot of these box vanilla, the Chases of the world and Wells Fargo's of the world, they won't deal with it. They want their cream of the crop, easy peasy, Fannie Mae, Freddie Mac, whatever that box is. Whereas broker channel, like Nancy said, we can go no income, no ratio. Yes, you heard me. No income, no ratio. Now there's going to be a cost to that, right. But if the customer is okay with it, that's why we have a bank statement. That's why we have, even a lot of people don't like to say reverse mortgages, but there's a reverse purchase option. That's something that might work for somebody. You just don't know until you can have that conversation with the customer.
That's right.
We, as in my opinion, brokers will want to know and engage with our customers what the goals are so we can meet those needs and have a conversation. I think we, as an industry globally, I really believe we've gotten away from that interpersonal, conversation.
Oh, no question. No question. Well, we always talk about, when you and I are talking, right? We always talk about the 3 C's, that you've got the communication, the collaboration, and build the community. And,
right.
And I think that's exactly what the broker brings to the table is that.
Especially recently, there's an article, National Mortgage Magazine published out about a week ago. While we all love technology, all right, we love technology, we love the convenience, we push it.
We love or we hate it, but we need it.
Well, correct. However, what we're finding is and it's changed over the years, more than 90% of the loan applicants surveyed, while they, understand the need for the technology, they didn't like the lack of interpersonal skills or just the human to human touch. Right. And as we come out of COVID and all of that, I think this was pre-COVID as well. I just think as an industry, we've lost that art, in my opinion, of just picking up the phone. Okay, screw the text. Sorry, but come on, pick up the phone and talk to someone.
Have the conversation.
Yeah.
And the conversation shows that you care, right?
Absolutely. And again, by understanding what their goals are, we will be able to do a better job in fitting them, Rick, with that particular program that we're going to be able to offer more on the broker channel.
So a little bit higher up, okay, I've decided I want to go with a broker, but how do I find a good one? Is there...
Nancy.
Well, that's true. So everybody on the podcast, call Kristen and Nancy, and when they're so busy they can't answer the phone. Okay, now is there like a better broker bureau or something like Better Business Bureau, or how do you find out who's a good one? Just through getting references of the people you talk to?
It's a good question, Rick, because everybody's got somebody to refer, right? And we all, whether we realize it or not, we do business by referral. You know, where'd you get your hair cut, Kristen? Gosh, it looks really cute. I'd like to go to that same person. And where'd you buy your car at, Rick? And I'd like to go to that individual. And we're all asking each other, you know, where did you do this? How are you doing that? So I don't know that Kristen and I would ever be too busy to take care of a customer, but there are your broker houses that are your big broker houses. Nexa is probably the largest broker house nationally, I would say, and it's NEXA. There's a couple others that are out there that are big broker houses, but you know, go to your friends, talk to your people, go back to who did your mortgage if you can remember, if that individual has stayed in touch with you, right? If they've cared about you and your mortgage and your process, go back to the original individual. But again, I think the broker has really come alive. You know, everything was shut down 2008, 2010, 2012. I think that's when CFPB came on the scene and tried to do everything they could to close that broker out and to take over. To put it simply, to take over and only do it through the big box chains because they could monitor them. And the broker continued to plug through and really came back alive about in 2016 to the benefit of all of us as the consumer.
Right.
And in turn, it's doing nothing but growing exponentially, bigger than what I've ever seen the broker platform before. So where do you, you know, your question, is there a broker, Better Business Broker platform? No, there isn't. That I'm aware of. Kristen, you?
No, you know what? That's a great question, Rick. And I agree with Nancy. Going back to technology, you know, I don't know. I used to have a phone book with the yellow pages. We don't have that anymore, right?
Yeah.
So, and with the ability, you know, part of the good thing with technology, while yes, Nancy's in Colorado, I'm in California. Nancy's licensed in multiple states. I'm licensed in multiple states to write mortgages or to, you know, fund loans. So it's kind of a good news, bad news, because, you know, while I love Dr. Google, sometimes I don't love Dr. Google because there's some bad information out there. But to Nancy's point, you know, referrals, majority of our business does come from referrals. And we do have the capability of, you know, I've got probably 2 or 3 clients right now in South Carolina that found me through our Nexa network. And, you know, I'm taking care of them and we're able to do something that their local bank wasn't able to do. So, good question.
But this is a national podcast. It goes out to the world. And so if you've got, so some place like Nexa would be a place, if it's some place that Nancy and Kristen don't have licenses in, because you're not licensed in every state, right?
No, I'm in 6.
Go ahead, Kristen. Where are you licensed?
Yeah, so I'm licensed in 6. So I'm California, Texas, because everyone's leaving California. But surprisingly, Dovetail, I've dealt with people who left, and then I've been dealing with them because they're coming back.
Right,
so,
right.
California, Texas, Tennessee, Florida, North Carolina, and South Carolina.
And where are you, Nancy?
I kind of did the chain up, and then I jumped over to the islands. So I did Colorado, Wyoming, Montana, and then Hawaii.
Okay. Just so you could go to Hawaii. I know how that works.
You know, a lot of my clients buy in Hawaii, so it's like, okay, It only makes sense.
Makes sense.
She's got me now as the hookup. She's had it.
Exactly.
She didn't get it just because she found out I was from Hawaii.
Well,
I did. I was like, what?
Well, I work with a ton of real estate agents, obviously over 1,200 of them, doing photography for them. And one of the things that I hear a lot of is my mortgage broker had to step in because the other mortgage broker wasn't going to be able to close us on time. That's not good. I'm guessing. But I don't know how I would know that going in. Is there a way to know that Joe isn't going to be able to do that or has a track record of not getting to closing on time? Or is it just, once again, referrals?
Gosh, that, again, I think it behooves all of us as the consumer that you've got to interview, right? And it should be one of your questions is what is your track record of getting to the closing on time? As silly as that sounds, as much as what you would just take that for granted, Rick, but and you guys processing and underwriting a file. I mean, I was just talking to a client yesterday and she had her ducks so in a row. I mean, it was a beautiful loan, Kristen. From the time, I know, it's like, whoa, from the time we submitted to the time we got clear to close, it was 3 days. 3 days. Because she got an appraisal waiver in there, right? One of those things we'll talk about as we go along, but she got the appraisal waiver in there, so no appraisal necessary. So this isn't, we're not sending a man to the moon here. We're not calculating how much oxygen they need as they go through the stages of atmosphere, right? We're just doing a mortgage loan. And so I love having the conversation, interview your person, just like you'd interview your realtor, just like you'd interview somebody that's going to come and work on your house, build a deck, whatever they may be doing. You're going to ask them questions. A doctor, right? How long have you been doing this before I allow you to cut on me? How many surgeries have you done? How many mortgages have you done, Kristen? The fact that you have dual licensing. Talk to me about that. Do you find it to be a conflict of interest? Why do you? Why don't you? Et cetera, et cetera. I think it behooves us to educate ourselves, make our decision, take responsibility for your portion of the process, i.e., like this gal of yesterday. Man, I'd like to tell her, I mean, it was like pay stubs, bank statements, W-2. She had them. She uploaded them. She was done with the process in probably 8 minutes of uploading her documents.
Well, that goes back to, sorry, real quick, but that goes back to shaping proper expectations up front. So yay you for not being afraid to have those conversations. Rick, to your point, 9 times out of 10, the file's going to fall apart at the end. And I love loan rescues because I've done loan rescues. And there's a tremendous satisfaction in those loan rescues, but it's also very frustrating because as an industry, there are, other people, companies, whatever, that don't shape proper expectations. Like Nancy said, this is not brain surgery. This is a conversation. And yeah, you know what, Mr. Customer, I'm going to need these statements. I'm going to need this. I'm going to need that because we have to put the puzzle together for the underwriter who doesn't know you. I know you. I know you're going to pay. I know you're going to make your mortgage payment. The entire process is to make sure that they pay back the money. That's the bottom line. I know you're going to pay it back. But this person sitting in a box in Michigan, Ohio, wherever, in a cubicle, trying to put the pieces of the puzzle together, they just don't know that. So big fan of proper expectations up front.
Agreed.
And so now maybe we'll do another episode just coming up with all those questions you should ask when you're doing an interview, because I think that would be really good that we could give everybody like a portfolio of questions. How long you been in the business? All the stuff you would think you'd ask, but what I probably would have never asked without being in this industry. What's your percentage that fall off because you didn't get it done in time? And it'd be incredible to find out how many people go, well, they all go to close. Well, yeah, but but it may not be because you did it, because somebody else stepped in and rescued. Yeah, Kristen and Nancy stepped in and rescued the loan to get it done. But that's neither here nor there. Obviously,
and it really. I think it's a great question, Rick. It really is fascinating about the rescue because it was just that somebody else didn't understand the income, right? Or somebody else didn't understand where the asset was coming from. It's like, Kristen, how many times have you, talked about the rule of 59 and a half, right? And it's, I mean, it's a great rule of 59 and a half. If you're 59 and a half and older, Kristen or I can build an income stream for you off of an asset that the IRS and the lender have agreed upon, either has to be a 401k or an IRA. I mean, just one example of a nugget that it's like, okay, why would I do an asset reduction? Right? When I'm taking an asset and I have to divide it out over 360 months or 365, when I can take an income stream and build it and just have a 3-year continuance. Next.
Right.
Right.
Yeah,
Next.
absolutely.
It's just knowing your product. It's understanding your guidelines. I think that's so big, is understanding what will Fannie and Freddie do? Will they accept this? Will they take the 1-year tax returns? Will they do this? Did you know that da 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 and et cetera? And it's having that loan officer that keeps up on that to bring you as the consumer. I'm a consumer. I have mortgages. Right? I have multiple mortgages. And in turn, it's, I want to talk with somebody that knows what's going on currently and how do I maneuver these waters.
Right. Well, and those questions too, I mean, absolutely. And that goes to that initial conversation and asking the right questions.
Absolutely.
Similar situation, not a 59 and a half. Everybody's, well, we'll see. There's a lot of people still working remote. We'll see how much longer that lasts. However, you have folks that maybe they live in Colorado and they're going to move to Texas, and the company says, yeah, no problem. You can, and they're going to, I work remote, Kristen. I can work there. I can do that without asking the question, hey, Mr. Consumer, Mr. Buyer, when you do that remote position, just curious, does the pay scale change?
Yeah.
Oh,
brilliant.
Oh, well, I think so. And I said, before we do this, because I know the underwriter is going to ask this question. Had a client very similar, was moving from New York to Texas, and found out kind of halfway through that, oh, oops. We get the letter from the employer saying, sure, he can work remote.
But income went from here.
But his income may be affected. And that's it. May be affected. Done. Yeah. Okay. So, those are the silly examples of just not knowing the guideline, knowing the situation, asking the question. And this is where your banks, to your earlier point, Rick, your big boxes, your online people, they're just not asking the questions. They're not, your point, questions to ask your loan officer. We hear it, but Nancy and I both hear this every day. We talk about this all the time. The question we typically get is, what's your rate? And then we go back to, you know what? Who knows? I don't know your situation.
Right.
Why don't you ask me, how many loans, not that it's about me, and I hate that, the I part of it all. But how many loans did you fund? How many loans didn't you fund? Things like that.
But rate does come into play, because obviously certain companies have their own rate structure that is going to add on top of the rate, correct? As far as how much they're going to have to charge. So
Yes.
in a real quick example, one of the things I looked at is if you have a $400,000 loan over 30 years and somebody can get you to 6.25 without points, and somebody else is so at 6.25, it comes out as basically your loan over the course of that is going to be $886,000 and plus in the cost of the loan. Whereas if it's just a half point difference over the course of that loan, it's $933. That's almost $50,000 that just picking. It's like on Indiana Jones, you chose poorly, as opposed to you chose wisely, when he picked up the chalice. So, and so it's obviously worth taking the time to find out who's going to handle your loan and doing that interview, because it can be a big difference, because they may not have a product. I mean, if I go to a bank and I am a veteran, they're not going to offer a VA loan because they can't. So they're going to go, but we got a great loan package over here because that's what they sell, right?
Right.
Right. Right. I think it's what makes it difficult for the consumer is because, well, you're telling me this, but you're telling me this, but you're telling me this. And so find the individual, i.e., again, we go back to the broker, find the broker that can do all of it. Right? No difference than an insurance broker or a car broker. They're going to have access to things that just Chevrolet doesn't, just Wells Fargo doesn't, right? Just that one individual. So if you're really shopping, and Rick, you're right, rate matters. There's no question. And I don't think Kristen and I would ever say that rate doesn't matter.
Right.
Right? But rates associated with fees.
Right.
And so when somebody says, Nancy, I want the lowest rate, it's like, I can give you 5.25% today on a 30-year fixed. On a $600,000 loan, do you want to pay $22,000 for that rate? So then all of a sudden it's the backing up and saying, no, I don't want to pay $22,000. It's like, that's right. That's the right answer. No, you don't. What you want to do is find that balance. And I think that's, again, where it goes back to the conversation and the communication that you're having, what you're establishing with that loan officer, right? And what we're establishing with that consumer I've always said, and Kristen, I think you're going to agree with this. I think you and I have talked about this regarding whether it's real estate or whether it's lending, right? That real estate is about strategy and negotiation, and then strategy, and then negotiation, and then a little more strategy, and then you close.
Right.
Right? But that strategy starts with your loan officer to say, okay, I want that rate. Maybe I don't want that 6.5 that the market's offering right now. So how do I change that, Kristen? Do I buy points? What does that look like? Exactly. 5 points. Do I do a 2-1 buy down? What does that look like? What are the ramifications of it? What are the positives and the negatives, et cetera? Because it's the rate, the initial rate is market rate. Rick, what you're showing on the amortization schedule is great, but it's like, is that market rate or is that a rate that you paid for?
Right.
Right? Is that a rate that you asked for to get paid on? Right? Because you can take a rate that the lender pays you, believe it or not, that the lender gives you a credit for $2,000, $5,000, right? So what is that strategy? How long are you going to stay in the house, et cetera, et cetera?
Right.
Well, that's a great discussion on finding out who and how you should have to do your mortgage. Obviously, if you're in any of those states that these two represent, I'd call them. But so I've decided I'm going to call you guys to handle my mortgage. What's next?
Kristen?
Okay.
Pre-approval.
There you go. I would start with explaining. Well, I'd find out what market you're in, what sort of how competitive it is. Will who's your agent? Because I'd love to chat with them. If it is a competitive market, we want to structure your approval as competitive as possible. And I'm sorry, pre-qualification, and I'll let Nancy jump into this. Pre-qualification, pre-approval, approval, final approval. So we've got a few different approvals going on there because could impact how you decide on the rate, like we talked about earlier. Nancy talked about, well, is the lender going to pay me? Maybe the seller can pay. Maybe the seller can pay some of this cost as well. And then we have that conversation. What's the play? Is this your first home? Is it your second home? Is this just a 2-year play? Then maybe we don't really care what the costs are because we want to get in for as little as possible because we know we're going to make so much money. Again, depending on your market, every state is going to be a little different. But yeah, I think
PQ. I'm going to jump in just in the sense that, and you being a realtor, right? As well as a lender, I should say, there are so many real estate agents that say, well, make sure you get pre-qualified. So let's make this distinction real quick here. Pre-qualification is nothing more than the conversation, hearing the story, listening, right? Asking the questions, starting to develop those puzzle pieces. That's a pre-qualification. There's nothing on paper, right? And then a pre-approval comes when you do the digital loan app. Everything is digital, like you were talking about tech earlier. You do the digital loan application, and in turn, now you've got it on paper, but you have nothing to back it up.
Mm-hmm.
Kristen, I make 10,000 a month and I've got, 50 grand in the bank and blah, blah, blah. And you go, well, okay, that's great. So let's back it up with some documentation, right? Let's get the pay stubs. Let's do the W-2s. Let's do the bank statements. And I'll interject this real quick, you guys. The lender always goes with what's in arrears. In other words, what's behind you. The lender never looks at the future, right? Because the future, as far as the lender is concerned, doesn't exist. So it's 2 years of the last W-2s. It's 2 months of the last bank statements, right? It's 30 days of the last pay stubs. And so we're looking at historical. And so in turn, that pre-qual to that pre-approval to that full approval, as Kristen was saying, is nothing more than doing the digital loan app and uploading those documents so that loan officer can say, hey, what you told me is now being backed up by the material paperwork, right? That pay stub, that bank statement. But again, I think that you go into the strategy, as you were saying, Kristen, with the agent, is to say, okay, what kind of market is this? Mm-hmm. How bad do we want this house? Do we go in with no seller credit? Again, we go back to the strategy. How do we want to position our offer as the buyer? First, we talk to the lender. We support what we're saying, who we are, right? What we do, and we support it by documentation. The lender, how long, Kristen, does it take to run a client through AUS, automated underwriting service?
With proper documentation.
Yeah, like 30 seconds kind of thing. Push a button, get approved. It's like go. You run, right? Light your hair on fire and go. And so again, this isn't a long-term play. This is what takes the most amount of time is the strategy for us to listen to the client, to hear the story, to start to say, okay, what I'm hearing in the story is X, Y, and Z, and here's my recommendation. And again, this is why I'm recommending what I am, because this is what you're wanting to pull off, right? You move every 3 years. You're in and out of your houses. You're a stayer. You think the 30-year is the greatest thing because you're going to stay in this place for 30 years. Maybe it's the 15-year. Maybe it's the HELOC. There's a plethora. Right. So it is. I think that's what makes it fun. I think that's why we do what we do.
Right. It goes back to the puzzle. It goes back to the puzzle and just putting the puzzle pieces together. With your point of, and again, a lot of mortgage brokers don't do this, but it is so important to have that relationship and understand what the buyer's agent is doing, because it will affect the outcome for the customer, especially the recent NAR stuff with, okay, who's going to pay the buyer broker? Mm-hmm. Okay, well, depending on your market, this could shift, do we go in for any seller credit? Do we go in for seller credit and buyer broker because the buyer doesn't have the broker money? There's just so many different nuances to it, Rick, that I think, we have to have those conversations.
But you both recommend getting pre-approved before you go look.
Well, I would recommend, and I take it straight to the approval. Again, the pre-approval is
just
right,
get approved.
You and your wife have filled out the application, and it's like, oh, okay, you're telling me that you make 10,000, 12,000, 3,000, whatever that number is. How about let's upload a couple pay stubs and let's back up those numbers with that documentation. Yep. Now we've got the approval. Now Kristen and I can write that lender letter. So let's back up for a minute. when you put an offer on a contract,
Right.
right? Kristen is listing or buying agent. She's asking for show me the money, so
Right.
to speak,
Right.
right? And that show me the money is a lender letter. And so that's why you as the consumer, me as the consumer, any of us as the consumer are doing the preliminary work, getting that approval put in place so that lender letter can be written, so it can be pushed with the contract, right, to, if we're obviously representing the buyer. So the listing agent knows that they've got a viable buyer here. They've got a lender letter that says you're a viable buyer. I've looked at pay stubs. I've looked at bank statements. Assets income is what we call it, right? And that this individual is approved to purchase 1234 South Street, right? And typically a lender letter should be property specific. It shouldn't just be out there as a
PPD.
Rick can qualify for a loan of 400,000. It's like, on what? On what is he buying, right?
Right.
Well, not just well, yes, address specific, product specific. Is it a condo? Is it a manufactured home? Is it a
land?
Condo.
And is it single family? You know,
Yeah.
This goes back to just the puzzle pieces.
Yeah.
So we used to do, like you were saying, pre-qual, which is basically, hi, this is what I say I have. Pre-approved is a lender saying that I can do this. Is there a difference between approved and pre-approved, or are they the same?
Kristen?
No, your pre-qual is the conversation that Nancy was talking about. The pre-approval is, yes, now I've confirmed asset, income, credit.
Okay.
You know, we run it that way. An automated underwriting system, or your AUS, that's going to be your most, your strongest approval with the information that you've been provided by the consumer.
So let's make it even a little more complicated.
I was gonna say,
let's do that.
Because you guys, what you don't typically hear, what the consumer doesn't hear of, is this AUS.
Okay.
Right, this automated underwriting approval. And we're connected to Fannie and Freddie. Fannie and Freddie, you've all heard of. They're the underwriters of mortgage paper, right? And so in turn, what Kristen and I do when we have a loan application, we've talked with you as the consumer, we've got the puzzle pieces together, income, assets, etc., debt, right? We haven't even talked about debt yet, but we pulled the credit report, we've got the debt. And in turn, now we push a button, whether it's Fannie Mae or Freddie Mac, they each have different nuances as to whether we're going to take you, Fannie or Freddie. That's part of understanding your guidelines. We push a button and you now are being underwritten digitally. And we get a report that says, if everything you've told us is correct in this report, you're approved for the loan. However, now you go under contract, right? Now all the documentation is in and we submit it to an underwriter. It's a little confusing because you think, well, isn't that what AUS is? Well, it's the first step of underwriting because the physical underwriter now is looking at those AUS findings and they're saying, did Kristen get the 2 months of pay stubs that the AUS findings is asking for? Did Kristen get the 1-year tax returns? Did she get the 2 months bank statements, etc., of what AUS was asking for? And the physical underwriter works for the investor who is financing this loan, right? And so in turn, you've got 2 stages of it. You go through the physical underwriting, and then you come out with what's called a conditional approval, because that underwriter may say, you know, I want 1 more bank statement, or I want an explanation on a condition of the appraisal, or a comp on the appraisal. I mean, it could be a plethora of things. And again, it's why it's a process. But the more the consumer has their ducks in a row, the more the loan officer understands guidelines and regs, the quicker and the more delightful this whole thing comes together.
Is there, is there such a thing as same as cash applications where you're so approved that you can, because I know that I thought back during the heyday of 2021, 22, I heard in one of the sales meetings I was at a brokerage that they were saying, yeah, I had a client who they were on a loan, but it was basically, it looked like cash to the seller. Were they blowing smoke? Have you ever heard of that? You're saying that they're always conditional on the property.
We both sit here and go, well, because if you're going,
Sort of depends.
Kind of, sort of.
Kind of, sort of.
Sort of, maybe, likes.
Maybe.
Yeah. Yeah, we're not saying they were lying, but okay. We're not saying they were totally telling the truth either.
An agent says same as cash.
Mm-hmm.
The way I would perceive it is to say the client has the asset, the liquid asset, i.e. we're buying a $500,000 home. They're taking out a mortgage for $400,000. They're putting the 20% down, right? 20% is $100,000. They're doing a loan for $400,000. But if for some reason that loan fell through, they have the asset, the cash, to back it up and to put the loan aside, still buy the real estate.
Okay.
That's one and the same, that it's equal to cash.
Okay, from an offer standpoint.
Would you agree with that? Or
But there is no approval process that works that way because the bank wants to qualify it relative to a property. Right, Kristen?
Correct.
Yeah, because you're qualifying not only and that's a great question, Rick. You're qualifying the borrower and you're qualifying the asset.
Okay.
Right.
And to Rick's point, though, kind of the property, because if you didn't get a property
waiver,
appraisal waiver,
right?
Mr. Appraiser may not like that mold in the corner, and seller doesn't want to fix it. So yes, it is the property as well.
So here we are. We're almost done with this episode, and I think basically we've scratched the surface. We got them in and started thinking about their mortgage. And so, if this was a class, we're like maybe in the first week of the class in a semester.
Right.
So, maybe we should have you back and we can go into week number 2. What do you say?
Oh, love it.
I'm in.
All right. Well, if you want to get a hold of Nancy and you're in those states that she actually has a license, you can reach out to her at the number there on the screen. And of course, you can do the same with Kristen if you're in California, or I guess if you're in Hawaii, you could go to either of them, right? You're both in Hawaii, correct? So, but it's been great having you on the program today. This has been awesome. And I think our audience is really going to appreciate the knowledge that they got from the show. And thanks again for being on.